Okay, welcome everyone. We've got a big day in the stock market today. It is Fed Day. Lots of anticipation around this Fed Day meeting. So we're going to go through the various scenarios of what to look for after the Fed comes out, talk about what's expected of the Fed, and then we're going to look at the charts and look at key levels to watch for support and resistance. I'll follow up with some trade ideas that I pointed out, and we'll try to find some new ideas. Leave me a thumbs up, guys, if you find value in the content, and also check out the stock market technical analysis course. Link in the description below. I'm charging a flat $99. I haven't raised the price on that, and it is pretty good value for what you're going to be able to pick up in terms of skill sets using technical analysis. All right, starting off with triple Qs. All right, so we're seeing selling coming in this morning. Seems like people are front running the Fed a little bit. Coming down to this support level at about 383.05 is kind of the nearest term level that I see. So that's your former high area right in there. And we already hit it once. We held, we bounced off of that. Now we're coming back down to it. And likely that's about the time when the Fed's going to come out. I think what's going to happen, at least, if I had to anticipate what was going to happen, I think the Fed will come out and sound hawkish and the market's going to dump. Okay? One of the reasons why I think that, and again, this doesn't have to be the way it plays out, but I'm just using what I see in the charts, clean negative divergence, all right? You see the negative divergence just dropping off on the momentum indicators. So it's indicating that we're about to see a trend reversal. But, again, until you see it, you don't actually have a trend reversal. We did also on the weekly chart, and this is another reason why I think the market's going to drop. If you look at the weekly chart, this is your big bearish engulfing candle right there. I've talked about that. And then we had a follow through week right there. So that's a reversal candlestick. Bearish engulfings come at the end of extended uptrends. And usually what you want to do to help confirm a bearish engulfing as a reversal candlestick is see follow through the next candle should be kind of confirmation or more selling basically on this bearish engulfing. And that's what we have. So we had a bounce week last week, and so far this week coming back down. So all in all, I think we're going to see a move to the downside. Now, where do we go? Well, as I zoom back out to the daily, I think the potential to drop to this area probably today about 374.50. Somewhere right in there. About 374.50. I think there's potential for a move all the way down there, a pretty swift move down to there. A break of that, if we break that, let's say there's a lot of momentum to the downside and we break that, then we have some bigger picture things going on. And another level to watch if we break that would be, I've got a level right down here, and I'm going to get rid of this one right here. I don't like that one anymore. But right there at 354, it's about 354.50, something like that. You can see we had support. I had it marked out from the past. That's good support right down there. So watch that as a key level. And even if you just get close to it, I think it's likely you're going to see. That's a huge move. It's not going to happen today, most likely. From where we're at now, that would be a drop of 8%. That's not going to happen today. But I could see us getting down to this 374. They'll probably try to, hold that. That's where the dip buyers have been at. So as I zoom out, you can see all the times they've hit that trend line. That's where they're trying to try to hold that support line. So that's where I'd expect them to try to hold it again. And the SPY. So I'm more concerned about the triple Qs just because that's where a lot of the FANG stocks have been, where a lot of the strength has been at recently. So that's really what I'm more concerned about. But, I see the SPY coming down to this support line right here, 454.30, and then potentially down to here at 443.65. So from where we're at right now, that would be a drop of about 3-4%. That could happen if we get a really impulsive selling. So watch that. That trend line is the line where they've pretty much tried to hold support for most of 21. So you can see I've got it all circled where we held. So that's where the dip buyers should be at if we get some sort of impulsive selling. If we break that trend line, which I don't think we'll break it today, given that we're way up here, it'll probably take a lot of selling just to get down there. But breaking that trend line, and you've got bigger picture things going on. I pointed those out in several videos. Another reason why I think we're going to sell off, see the negative divergence, we have that in the SPY too. So we've got negative divergence across the board, and that tells me we're likely going to see a sell-off. And the IWM coming down to that support line, so that's pretty much hitting close to our target today on the IWM. Now, things to look for in the IWM: big sideways range. This is small caps, right? So big sideways range. All the strength this year, for the most part, has been in, a lot of it has been in the tech sector. Obviously, you've got commodities have been done really well. Financials have done pretty well too. But the IWM, the small caps, have gone nowhere. Just a big sideways range for the whole year. We had the false breakout. We broke out, failed. That breakout came with negative divergence. And then I said we're probably going to head to the bottom of the range, and sure enough, there we go, down at the bottom of the range at this point. So that's close enough to call it the bottom of the range. So this is where it should bounce, because it's bounced, every single time this year down here. And that's what I would expect. But the thing is that a break of that trend line, and you've got, you basically, it's going to look like a top, look like an all-time, look like a longer term top in the market in the IWM if we start to break this support line. Okay, so things to watch for. The level is, I have it at about 209, so somewhere right in there. Start to see breaks of that. Nice impulsive breakdown, and that would be likely a top in the market, at least in the small caps. Okay, and here's Carvana, quick little trade idea. I talked about this one yesterday. Say things down almost 10% today, so clearly working out to the downside. Again, yesterday was a sell signal. I talked about that in the video. So if you took that sell signal, you're up by at least 10%. If you took it early, you're up by more. But so far, pretty impulsive selling. And again, just pointing this out. Now, I wouldn't want to short it here because we've already started to see pretty impulsive selling. But here's your weekly chart, and look at that. You've got support, support, support. Again, I X that out, this COVID drop. The reason why you mark that out is because this was like a liquidity event. Forced selling, where the algos margin calls basically are firing off, causing people to exit positions. And it wasn't technically based. It was based off of the margins, the margin calls forcing people out of positions. So that's why you kind of X that out. And then the Fed came in and propped it back up. But then, again, you can see clear sell signal on the week so far. The week's not over, but that's looking pretty solid for a big down weekly close and a break. So over time, over the longer term, we should continue lower. But I could see us bouncing somewhere here in this area. We do have some support right there at about 226.25. Now we've overshot that a little bit, but we could pop up after the Fed. I wouldn't want to take a big position in anything really right before the Fed, so that's kind of key. And let's talk about the Fed real quick while we're at it. So the Fed, right now it's anticipated the Fed's going to increase their taper. All right, double their taper is basically what the anticipation is, and then the rate hikes are kind of in question. There's not going to be a rate hike today. It's almost certain. Of course, there could be, but it's almost certain. Most likely, there's going to be just a doubling of the taper, and then they're going to signal that they're going to start to raise rates, in the second half of next year, and that's basically what it is. So it's going to come down to, okay, how many rate hikes are they anticipating, and do they actually taper more than what's expected? Most likely, this Fed does exactly what's expected, which is the doubling of the taper, and then the rate hike. So we'll see. I don't know how the market's going to read it. It's really could go either way, whether the market sees it being bullish or bearish. I just have to go with the charts, and the charts show me the negative divergence, shows me that we're likely going to go down. So I put the probability to the downside. Now, if the Fed tapers more than expected, then look for the markets to go down. If they decide to not double their taper and keep the taper on pace with what they have, when I talk about taper, I'm talking about them reducing their bond purchases. If they keep it to where it's at, then that should be bullish. The market should rally, and that should be bullish. And then obviously if they hike any kind of tightening beyond a doubling of the taper, whether it's more rate hikes than anticipated next year or anything like that, that should be bearish for the markets. Okay, let's look at gold. So gold bullion, and I'm just looking at, this is gold bullion, it's basically flat today. Now they're smashing the miners really good today, but the underlying metal is not going anywhere. So we're going to have to wait for the Fed to come out to see what happens here. We're right on the trend line. So here's your bull trend from 2018. I've got every single tag of support circled out, and we're basically tagging it right now. Okay, so we're going to have to wait for the Fed to see what happens. Do they break the bull trend today? That is possible. So we'll want to look for that. The miners seem to be selling off in advance, but the metal is still hanging in there. I think it's, if I had to put the probability, I'd say we're going to go higher because we have bullish divergence that has been building for a while. So if I zoom in here, you'll see that we basically have bullish momentum moving up and price was kind of drifting low. This is your bullish divergence that was set up, and we are actually uptrending as well. We're making higher lows and higher highs. Now recently we've kind of started to squish down into this triangle. So, we'll have to see which way of the triangle it breaks out of. But I do see bullish divergence on the momentum. So it doesn't have to remain. We could burn through it, but I do see it. And then as I scroll through some of these miners, like let's look at Barrick Gold. This one, as you can see, is making a new low just today. And it's, it's making a low right before the Fed. So this to me is most likely a stop run, kind of an algo-induced stop run. They're trying to squeeze people out of their positions. It doesn't have to be that, but that's what it looks like because, it's happening right before the Fed. And as I zoom out, you can see this is coming off of 2015. So this is when the bull market in this stock started back in 2015. We've got every tag circled that we hit support here. Here's the COVID drop hit support. And then you can see right where we're at right now. So we're coming right into major support, long-term bullish support. Dropping down into that right before the Fed tells me that if I had to put the probability, and then one other thing, bullish divergence. See that right there? See how we are just moving higher in the momentum? And, let me zoom that in. Just about even right there on the RSI. But we're so moving basically higher on the PPO, even on the RSI, and yet price is making a new lower low. So that's a divergent low as of right now. So that tells me that I would assume with the setup this chart is giving me, that the fact that we're right there at major support, that gold's going to pop after the Fed. All right, that's all I have to. That's really what this tells me. And then looking at gold bullion, we're basically right there. Now watch. They might try to break this, just whip it down, run some stops, and then recover it. That's possible. Anything's possible. We just have to wait and see. But some of these miners are set up bullish. They're even now still set up bullish. And to see them get smashed right before the Fed meeting, could be. Obviously, these are these have been going down and just rolling back out. I mean, gold's been falling since August of 2020. So these miners have losses. And the mining, and I didn't start buying these mining positions till we started falling down into some bullish divergence. I basically started buying Barrick Gold down in here in September, but so I'm on some losses too because I've been kind of building a position, but definitely haven't been writing it down since August. Okay, I started to get bullish on these things when we put in that bullish divergence right there. You see this low here and see the new low right there, and yet look at the momentum, right? Basically, you make a low in momentum, and then right there is a higher high in momentum, and yet lower low in price. So that's where I started to get bullish on these miners. So not sitting on huge losses. We rallied up from there. We've come back down. We're making another divergent low into major support. So I'm trying to build the bullish case for gold. Now if we start breaking these technicals, breaking this bullish divergence, breaking these support lines, start getting major sell signals, then yeah, we'll have to change and start looking for areas to stop out of these mining positions. But as of right now, we're right at support, and I like to buy, if something's bullish, I want to buy it at support. Quick touch on this one. I want to kind of touch base Rio. So still, there's nothing really wrong with it. It is, it has broken out. It has a bullish pattern. But, I'm going to pull this trade, at least out of my thing, right before the Fed. We'll see how it reacts after the Fed. But, given the nature that it looks like the markets have a high probability of selling off, or a higher probability, I don't want to be long kind of an infrastructure play, which is what this really is. And it's a commodity play as well. But if we're going to see some sort of a negative reaction to the Fed trying to taper, then, something like this will likely come down and go lower. So I'm going to pull it, and, we can always add it back after the Fed and after we kind of let the dust settle a little bit. And I haven't talked about this one, but here's GNRC, Generac. This was a short trade idea that I talked about really back here in November, early November. And we were looking for a move down to these key levels that I have marked out. And you can see there we are. We're right there at support at 340.25. We should get a bounce here. I would expect we're going to bounce here. So maybe that comes after the Fed. If I look at the hourly, yeah, starting to build that bullish divergence there in the hourly as well. See that? See how we're starting to kind of tick up in the momentum indicators, and yet the price is still drifting lower right through here. That's bullish divergence. So I covered my short trade on this. I'm not short GNRC anymore. All in all, a really good trade. Probably going to, I think there's likely going to be some more downside, but I think we're going to get a bounce here. And we could bounce all the way up to the resistance level, about 385.53 is the area of resistance. The trade so far, if you took it on this sell signal, that's a move of about 28%. So a pretty solid trade in a really short period of time. I know it doesn't look like much. If I take off the logarithmic scaling, you can see that this thing's, definitely come crashing down pretty good. But we are definitely at decent support here. And you can see this was your former support resistance area right there. So I'd expect this to bounce off this level. So it's actually a long here. You could flip long. I think that makes sense. And for a bounce up to probably this level right up here at 386, 385.50, somewhere right there. You want to step in a little bit early and close that out. But I think that's a good long. And from where we're at right now, that's a move of about, 13%. So not a bad trade. There's a trade idea on the long side. Here's a short trade idea right here, likely going to trigger after the Fed, Qualcomm. So Qualcomm on the daily chart, big gap up just recently. And it's just been trading on this trend line here, this kind of upward trend line, just walking higher. But it's been doing that recently with negative divergence. So that means that I'd say we have a high probability of breaking down. I'd look for a break of this trend line right here. If I go to the hourly chart, you can kind of narrow that down. And a break of that should set us up for a move. Probably to fill the gap all the way down here would be my target right there. So, and it doesn't mean it'll happen in one day, but 139.30 would be the first target on that. Possibly even lower. Qualcomm has a gap way down here at 94.03. So, if we're going to get some sort of major move down, and we've already seen big sell-offs in other stocks, Roku and Square, and a lot of these stocks, we're seeing big moves to the downside already. So this is just one of those, this is kind of a FANG play. It's tied to Apple. So if it breaks, we could run down, fill the gap. That's probably where you'll bounce, at least initially. But we could be making a move all the way down to 94 as a final target. Okay, so there's a trade idea. Watch for that. Likely going to trigger, probably going to trigger maybe right before the Fed or right after the Fed announces. And NVDA still looking good to the downside. I see no reason why this is about to reverse and start to move higher. So I am short this. Likely going to move down to 266.61. Probably going to get there today if we do get that sell-off right there. There's a gap to fill. So as I zoom in on the hourly chart, there's a little gap right there. So maybe we move down to there. From where we're at now, that's a move of about, 5%. So I think that's likely. But again, I'm also looking for lower prices down to this lower trend line right here. And on NVIDIA, you can see this is basically the longer term support line. So I'm looking for a move down there. even lower possibly. This might be a major top. I put out a video a couple weeks ago saying, okay, this looks like a top. And again, I've tried to call the top many times. I've been wrong many times, but I only can go off of what I see at the moment that I'm making that call. All right. And in hindsight, you find out if you're wrong or right. And it's easy to come back and say, oh, look, you were wrong. Well, yeah, but nobody knew that at the time. And I was only going off of what I saw. So, but this continues to look like it wants to move lower. So this one's got a long ways to go if it does want to fall. And we could be making a move all the way down this 217.25. Again, big negative divergence is at play here. See that? So we continue to drift higher in price. Although we had negative divergence, and my trend line got messed up a little bit, but basically like that. And then we broke trend, and we just start drifting lower. So I think there's more downside on this one. And MGM still looks good. Again, I still think we're going to head down to this 34 area right there. Probably going to get there today if we're going to get that sell off. So, well, maybe not today. Let me look. That's about that's a 15% drop. Likely not today, but I think we're heading that direction. Again, you've got negative divergence right there. So we made a new divergent high. I have it circled. From that divergent high, we basically have just done nothing but selling. And we had a near-term support right here. I've got that all circled out. We broke support. As I zoom in, support, back test, and roll over and fail. Also a bear flag. So as far as I can tell, we're projecting a move down to, right now it's saying all the way down here. The projected move on that is about 31, 32. So perhaps that's where we're heading. But 34 to 32 is the support zone right in there. Okay, so that one still looks good to me. Net's been taking a bath recently, so kind of taking a breather today, but still looks like there's more downside on this one, heading down to 110.54. Okay, and I've just been scanning around looking for anything else. That's about all I see so far this morning. So I'm going to get the video out there, guys. Leave me a thumbs up. I do appreciate that, and I will see you guys later. Bye.